Hello my dear children, welcome to today's session of online class of Sri Gokulam Public School Guruvayur. Children, we were discussing chapter 9 financial management. In our last class we have discussed about the concept of financial management, role and importance of financial management and objective of financial management. Today we will discuss the concept financial planning. So these were the concept related to this chapter and we have already covered this. Today we will discuss about the financial planning, that is concept and its importance. So what is financial planning? We know that we all do planning. So from organization's point of view, it is very important concept, that is planning. So financial planning is essentially the preparation of a financial blueprint of an organization's future operations. So we are preparing a blueprint for the future operation of that organization. It ensures that enough funds are available at right time. So fund is required for almost each and every activity of the organization. So it is through financial planning that we ensure that we have enough fund and it is available at the right time. If adequate funds are not available, what will happen? The firm will not be able to honor its commitments and carry out its plans. So a firm cannot be able to honor its commitment, whatever commitments it have undertaken, or whatever production works and all other activity related to production of goods and services, that cannot be honored, and also as per the plans the things will not move. So adequate fund is required, so that can be ensured only through financial planning. Financial planning takes into consideration the growth, performance, investment and requirement of funds for a given time period. So it is through financial planning that we will consider for a given time period how much the growth, performance and investment and requirement of fund will be considered. What is financial planning? The process of estimating the funds requirement of a business and specifying the sources of fund is called financial planning. So two things are involved. We can state financial planning as a process, and it is a process in which we estimate the fund requirement and also specify the sources of fund. So from where this fund can be made available, as well as how much fund is required, that estimate can be done through financial planning. Now, what are the objectives of financial planning? To ensure availability of funds whenever these are required. So whether we have sufficient fund for performing a particular activity, to ensure that we go for financial planning. So financial planning involves estimation of the funds required for different purposes. Funds are required in an organization for different purposes. Which are those purposes? Funds can be required for purchase of long-term assets, or it may be required for meeting the day-to-day expenses of the business. Then financial planning is involved in estimation of the time at which these funds are to be made available. So within what time these funds are should be made available, the estimates of that it's prepared by financial planning. And also specifying the source of these funds, from where the funds are to be made available, that is also specified by the financial planning. So these three areas are involved when we are thinking about availability of funds, and it is whenever it is required. Next is to see that the firm does not raise resources unnecessarily. This is the second objective of financial planning, that is we don't go for over financing and we don't go for under financing. This point was discussed in our previous class also. if excess funds are available, if we raise excess fund, what will happen? It will unnecessarily increase the cost and the resources will remain idle, or it may encourage wasteful expenditure. So if we are taking a bank loan, and we know that with a loan a cost is involved. What is the cost involved with the bank loan? Yes, it is the interest rate. We have to pay the interest rate for the loan taken from the bank. So if we are if we are going for excess fund, that is, if our requirement is for 8 lakh and we have taken 10 lakh as bank loan, so unnecessarily we are giving the interest on that loan for that unused part of the fund. So that is a wasteful expenditure, isn't it? So excess fund should be, or unnecessary increase in cost should be avoided. Thus, a proper matching of fund requirement and their availability sought to be achieved by financial planning. It is through planning, which is one of the function performed by financial management. In this function, financial planning, that process, we matches, that is, we go for a match of fund requirement and its availability. It must be kept in mind that financial planning is not equivalent or substitute for financial management. We cannot substitute financial management with financial planning. Both are required. In fact, financial management is a bigger concept than financial planning. Okay, so we cannot substitute, it is not equal to financial management. It's a broader concept. Which one? Financial management is a broader concept. Let us see a difference between these two for a better understanding. Financial management aims at choosing the best investment and financing alternatives for focusing on their cost and benefit. So through management, we select a good investment and financing alternative, and we focus the cost and benefit we will achieve from that investment. And financial planning aim at smooth operation by focusing on the fund requirement, how much fund is required and what time that fund should be made available. That decisions are taken in financial planning. The main aim of objective of financial management to increase the shareholders' wealth, and the main objective of financial planning is its to ensure availability of fund whenever it is required and to see that the firm does not raise resources unnecessary. So educate raising of fund and availability of fund. These are the two objectives of financial planning. Now, what are the importance of financial planning? Financial planning is an important part of overall planning of any business enterprise. It aims at enabling the company to tackle the uncertainty in respect of availability and timing of funds and help in smooth functioning of an organization. The importance of financial planning can be explained as follows. So children, through this financial planning, they plan in advance related to the availability of fund, the timing of the fund, so that we don't rush for at the last moment for the finance. So for the smooth functioning of the organization, anyway fund is required. So we have to consider all the factors and keeping that factors in mind, we have to make the fund available at correct time. For that, a proper financial planning is very important. So here are some points which explains the importance of financial planning in an organization. The first point, it helps in forecasting what may happen in future under different business situation. So when we are planning in planning we do for future, we know that. Through that financial planning, we forecast what may happen to our business in future. So by doing so, it helps the firm prepare better prepared to face the future. For example, a growth of 10% in sale is predicted. Suppose a business have predicted a growth of 10%, okay, in sales. However, it may happen that the growth rate eventually turns out to be 5%, that is decrease. It may decrease, we can't predict it. It may decrease, or it may go to 15%, more than what we have estimated. The amount of expenses and revenue will be different in these three situations. That is, we have estimated that, we have predicted that it is 10%. It may go to 5% or 15%. In all these three situations, the fund requirement is different. So, by preparing a blueprint of these three situations, the management may decide what must be done in each of this situation. So, with all these three situations, the financial planning have to be undertaken, and what should be done if this three situation arises, the solution for this should be prepared in advance. So there comes the importance of financial planning. Next point is, it helps in avoiding business shock and surprises and helps the company in preparing for the future. So if any shock or surprises happens in the business, that can be avoided if they are planning in advance about the future. Okay. Next point is, it helps in coordinating various business functions, for example, sales and production functions, by providing clear policy and procedure. So we know that each department is well coordinated with each other. So for the smooth functioning of these department, proper clear policy and procedure is provided. So in that policy and procedure, all the financial planning or budgets, everything is clearly stated. So for a better coordination of these departments, financial planning is equally important. Next point is, detailed plans of action prepared under financial planning helps in reducing waste, duplication of efforts, gap in planning and confusion. So if we are going for financial planning, then we can avoid the wastage or duplication of our energy and efforts, and if there is any confusion, that can also be removed. Then it tries to link the present with the future. So financial planning is like it connect the present with the future. Next point is, it provide a link between the investment and financial decision on a continuous basis. So whenever we go for a financial planning, it is providing us with the decision of investment, where we should invest, how much we should invest, how much fund we have, so that we can invest in some of the project. So those all decisions, and financial decision, that is procurement of fund, that all decision can be taken up if we are going for financial planning. Next point is, it makes evaluation of actual performance easier by spelling out the detailed objective of various business segments. There are different activities which is taking place in a business. So they can be termed as a business segments. So in each segment, now the objectives stated are different. So we can evaluate the actual performance taking place in those segments, and we can find out that is a detailed objective. We can verify the detailed objective of each of these segments. So children, now it is time to conclude today's topic. Today we have a very important topic for discussion, that is financial planning. We saw the concept and importance related to this financial planning. We also saw two important objectives of financial planning. So do read this topic very carefully and very thoroughly, because it's a very important topic. And attend the test paper attached along with this session. Meet you in the next session with a new topic. Till then, thank you for listening. Goodbye.